following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, squeezably soft host. And we got an interesting day trying to develop out here. Of course, they tried to open it up a little higher out here. We got to a high of 2064 in the S&P cash, down to a low of 2039. Was it lower than that? Let me update this just to make sure I didn't miss anything. 2038 on the S&P cash, printing out at 2046 right now with how much volume? 2 billion shares. So volume is a little lighter in the last 2 days. I think we're starting to get back into a usual pattern with Mondays and Fridays probably a little lighter in volume, and Tuesday, Wednesday, Thursday where most of the action is. But we will have to tell a little bit, probably till the close till we see what's happening. But looking at options, I spent a great deal of last night and had a very sleepless night last night, and kind of nodded off early, then woke up at 1 o'clock and of course couldn't sleep, and sat down and did some work, of course, because I couldn't sleep. Might as well do something. Went through a great deal more M&E charts and the options for those equities to see what was going on out here. And it looked to me like we probably put in the high for expiration week, but we don't have a great deal of downside just yet shaping up. And I'm thinking that we've got at least the underpinnings or the bedrock for a trend to develop. I can say that, we've had these wicked moves up and wicked moves down in this higher trading range, and we've been waiting for the time that the market gives up the ghost and starts having a move back. Everybody thinks it's probably going to be like what we've seen before, where you just woke up and the market was down 3 days and it was down 70, 75, 80 points on the S&P cash. I suspect that the rule of alternation is going to come into effect, and we're going to see a general trend, and kind of like the two-step, 1 step forward, 2 steps back, 1 step forward, 2 steps back, 3 steps forward, 4 steps back, that kind of thing, a little bit of a market cha-cha. And as we see that, it is kind of what we're seeing here the last couple of days. Wicked rip up, and of course, once you get very close to the previous highs, most of the buyers fall out. All they want to do is buy the dip. They won't buy any breakout. And that's kind of what we've had until we've had some huge moves down, and then too many shorts get into the market, and the market operators just run them out. But of course, that doesn't last very long. And of course, you rip right back down the other side. Everybody piles in on the short side. You get yet another rip higher. And I think this the last time, though, we didn't have as many people that were short on the way back up. I think a lot of people covered, and now we're seeing this kind of little air pocket we got today. But my guess is that we could have a much better trending market. Let's say we go 2 months into the future, it'll look like a line. Today, it will feel a lot more like a big move down, but we're off 15 points on the S&P cash. No big deal so far. It is options expiration week. It is rather bullish, but at best right now options are pointing to an expiration of about 2050 on the S&P cash. Oh, somebody just asked that. Or options success, but that can move over the next few days, and I think we're probably got a little bearish bias where normally you have kind of a bullish bias in expiration. I think, right now, my although that are pointing to 2050, I suspect that we're looking more at about a 2030, 2025 expiration close next week. Looking at the data so far today. Now, the key to using options to look at where market makers want to expire the market is the close. A lot of things will happen, especially the last 30 minutes, but just seeing what was going on out here today, I think they've took the mark down to about 2025. Haven't been looking for a massive move, but a move nonetheless. And, a lot of these stocks that are the darlings of Wall Street right now, they're doing everything to push these things higher today. And I just don't see the juice in them. Especially look at the IBB. They've been trying to push this thing up to, well, it got to 1370, 317, excuse me, pretty close to the open, and came back to 310. And now they've been kind of slowly trying to push this thing higher, but volume pretty light, 736 million, 736,000 shares. I think maybe my lack of sleep is showing here. But, a little bit of movement out here in the dollar. We're off 41 cents on the dollar index. I was thinking that maybe we're going to hold this 92, that we're tick under it. Probably not a big deal. You would really think that you'd have, if you wanted to confirm it, that you'd really be looking at the basically a huge move in gold. GLD's up $1. Is that a big move? The answer is no to me anyway. I don't see the kind of sign of strength that says that this thing is going to rip. Maybe we get that Monday or Tuesday, and then we start seeing a pullback in the dollar. But as far as I can see now, it just looks to me like the option market makers would just be happy to see this close maybe 15 points, 20 points lower than it is today, and watch a lot of options that they sold early in the week when the market was rocking pretty much go expired. Of course, the major market expiration again is on next Friday, and normally a bullish but bias, but right now, the market's been operating almost exactly as it should. We got down to lows. There was no volume. The market rallied. We got to the highs. Volume was much lighter than it should have been. We pulled back today, and that tells me that we're probably in a little bit of decision time. And the question is going to be, as they continue to try to push on this market, especially the option or the stock operators out here, they're down to a very few stocks that they can push and hold at like highs they had at the open. They fell pretty quickly today, and it still looks to me like it is problematic, but we shall see. Again, it is a little tough to be short these next 7 days. It's almost always a bullish expiration cycle, but depending on how you want to look at it, we're probably right about at the level mark, and they'd be more than happy to expire it here a week from today. So could we go sideways for a little while? We could. That's one of the reasons why I haven't been pushing options. Maybe next Wednesday we might see a clearer option path. But right now it looks to me like we're going to see the VIX start to pull back a bit. What do we have out here today for Mr. VIXy? And of course, my youngest puppy's name is Vixen. Most people don't get it. We're up 29 cents on the VIX out here, 1730. Anything below 18 is probably okay. One of the other things, of course, is that the Fed and the mechanism is going to work very hard to keep this market from collapsing. And part of that is everybody is pretty much margined out as far as the big hedge funds, or a lot of them are hedged out in what they have. And the Fed doesn't want any huge movements. They want those movements to be slow and steady. As they like to say, yeah, okay, the market lost half its value, but it didn't do it all in one day. It did it over a year, and it was orderly. And that's all they care about. They really just don't want any shocks to the system, sudden movements. They want to make sure that everything is slow and steady. They don't want to spook a lot of people and get a stampede and runs on the bank and everything else. So to them, it's not that they're trying to totally deny market forces. They just don't want the market forces to go galloping along. I think we're probably seeing a little bit of that, and we'll probably see a little bit more. Of course, we have a bunch of stuff happening. Of course, a huge amount of earnings coming out over the next month, and no more probably bigger than Apple on the 26th of the month. And that will be interesting, especially their guidance forward. I continue to see some stocks like Samsung, which, are kind of down in the doldrums. Everybody's saying, well, it doesn't matter. Apple can sell anything they want. Apple is, it just doesn't matter. They're in a league of their own. It doesn't, the fundamentals don't apply to them. And the problem is it almost always does. And my guess is that after everybody gets through the upgrade cycle, the problem will be, what does Apple do for the next 12 to 18 months until they come out with the Apple 15 or Apple 18 or whatever the next version of the iPhone is going to be. Can they find another product that has 65% margins on it? Boy, so far, looking at the iWatch, I would say it's a definite no. It looks to me like probably adding more in the line of a tablet, which was you had to sell 4 tablets, or Apple did, to equal the same profit in a single iPhone. And that is there, folks, is the rub. And with Apple still being 13% of the NASDAQ, we could see some huge moves associated with it. I think that we're probably going to see Apple try to hold up through earnings. But after that, I think we're going to start seeing the slow exit from a lot of these operators who figure out that, well, with another 12 to 18 months and only things like iWatches that the faithful are going to buy, I figure that if they can sell 1 out of 5 iPhone users an iWatch, I think they're probably going to do pretty good. And without a killer app, a fundamental app, still problematic. So probably the biggest move out here, Apple's off 32 cents today. Not bad. And of course, it was down to a low of 110.21. But at the same time, it was a high of 113.25. Are they going to continue to push this into earnings? I think the answer is always yes. And try to shake the foundation of what a lot of people think. I think they can, but I think Tom's been spot on looking at Google. It's printing off at 496. It solidly lost 500. It certainly looks like while Google's going to be doing here at good in the United States, that it's going to start losing at least some decent market share in Europe as protectionism really is blooming over there as Europe starts to crumble. They will try to protect themselves and in the end basically hurt themselves. You can always give me a call at 877-927-6648. You can email me at path@tfnn.com, or you can be like many people and just post a message in the den. Be back in a minute.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk, charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Turn my volume up here so I can hear. What else is going on out here? Come out here and see whether I got to find out where this thing is hiding. I know it's out here somewhere. There we go. And okay. Hopefully we have our engineers figuring these things out. But he types so slow that it takes forever. He was just brain dead. I don't have to worry about anything. And, of course, we always like to start off the show with a little bit of history.
And it's all just a little bit of history repeating.
Anyway, on this day in 1835, trading in a U.S. stock is halted for the first time ever on record. But, of course, not the last, as the New York Stock Exchange Board suspends activity in the Morris Canal and Banking Company amid widespread manipulation of the shares. Remember, of course, until really about 1934, you could do just about anything you wanted in the stock market. What else can you say other than that? But at least the stock exchange would step in sometimes when it was ridiculous. And they did the first time in 1835 on this day. Other than that, a pretty quiet day in the marketplace, at least in a lot of stuff. We've got some earnings and news out. One of the more interesting out here to me is Infosys. Let me redo this chart because I think it's a couple of years, couple of months, couple of hours old maybe. No, hadn't changed that much. Infosys, of course, which is the Indian company that does a lot of work for tech support in India for U.S. companies. Anyway, huge move out here, and they beat Q3 consensus by, I guess this is Indian denominated 101, reported inline revenues, reaffirmed fiscal year 15 guidance, and saw revenues up 7 to 9%. It was up 4%, much higher, though, earlier in the day, challenged the previous high, which was this $35.18 high from December 1st. 3.9 million shares. Got 3.4 million today, and you're getting close. You couldn't get into that, and gave a great deal of it back. You are going through a huge gap down that came down on 5.7 million shares, and it's back into that gap. So not uncommon for a lot of what I'm seeing out here when they were trying to push these stocks early in the day. Acuity Brands is another one that's popping out here. Reported Q1 November earnings of $1.32 per share, 19 cents better than estimates, and revenues rose 12.7%. So not a bad day out there in the market for them. But again, you got to be a little wary out here that you got a gap down on Monday and you get a little island reversal out here. But not a bad day. Lots of volume. Wasn't able to hold the highs like a lot of these other stocks. So nothing new. Bed, Bath, and Below went and did everything it was supposed to. Had a huge gap down. Let me go just a little farther back on this. Had a huge gap down. Finally got back into that gap. That gap happened on the 9th of January in 2014. So, just a year ago. 17.5 million shares, got back into it with 7 million shares. And, of course, this is kind of the pattern that I'm seeing now with operators driving these stocks back up to highs on short squeezes, only to see these things blow apart during earnings. And not everything's blowing apart, but a good deal of these stocks that came back up on lighter volume certainly are. And pretty good pattern out here that suggests that this is in a bigger trading range, and a huge one, actually, back to the 54.96 on June 26 to the 79. So what, a $25 trading range in Bed, Bath, and Below? Could be. BITA is Bit Auto Holdings. This one kind of making a little triple top out here, announcing a partnerships with JD.com and some of these other automotive companies. Not such a big deal out here. This looked a little bit dubious to me in the morning, and you can see this thing's making a kind of a, I think a dragonfly's at the bottom, isn't it? There's a dragonfly at the top. Anyway, kind of a weird pattern out here. Needed 4.7 million shares, got 2.7 today, which would give me a good indication that this thing's seeing some muted response. But they ran a lot of shorts out in the morning. BITA. Sounds bad, doesn't it? Abbreviation for something bad anyway. We'll be back in a minute.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And another company biting the big one, dropping the proverbial baby Ruth in the punch bowl, is a 5 below. This thing had a nice little gap out here, and it's come to just touch it a little bit today. And yeah, another one with poor earnings. Of course, this is a fairly recent IPO. This is like a dollar store, but it's a $5 store inside of malls, off 18% today. And you know, what else can you say other than this thing is down? Monstrous volume. Looks like enough volume to go blow out the previous lows down here. Last major one is 34.34 on June 5th of 2014. My guess is we're going to see that challenged here in the next day or so. And is that it? Yeah, it went public on 5/15, so May 15th of 2014. Hadn't been around that long. But yeah, that's 34 level is pretty much the support level in these things. So I don't see a great deal other than that. Of course, you can always give me a call at 877-927-6648 and email me at path@tfnn.com and I can't even say it today. Post a message in the den if there's something you want to bring up. Just checking back in on the S&P cash because not going to get a lot of action, I think, between now and the end of the day. 2045, which takes us 16 points off on the S&P cash now, 2.2 billion shares. So not much volume in these rallies. In fact, I watched that, pretty much was watching tick for tick the rally off of the 2038 low, where they ran it right back up to 2051 or so. And we kept on looking at it. It just looked to me like they were running a few of these stocks. And then, of course, they pulled back, and they weren't really getting a lot out of them. But it looks to me like they're trying to hold a lot of these stocks up and higher. And yeah, it may just be part of the whole distribution thing. But I don't see a lot of reason to back away from any of my shorts at the moment. Anyway, horrible news. Looks like it's going to go back there and challenge its IPO pricing lows, which is back in that 34 area. Well, what else do we talk about that one? Starbucks. This one's kind of interesting day. Would be a stock that Andy would be interested in. And this thing got a little thumping out here today, and announced that the COO is leaving for an extended unpaid leave from the company effective March 1st. You always wonder what that unexpected unpaid leave's all about, but market's kind of nervous. And especially when you shake up the executive team, everybody always shoots first and asks questions later. A lot of volume today out here. 10 million shares already. When we look at the previous lows in this gap, it actually gapped up on the 21st of November with 7 million shares, came into it with 7 million on December 17th, came into it with 3.8 million on January 6th. So it had a nice couple of day bounce and then back down the other side. But of course, volume today already exceeding all of those. So if you break 78 on this, I mean, could take you back down to the $70.77 low from October 16th, which just puts a lot of these in higher trading ranges. Nothing new to report on that. Wynn Resorts, not a lot happening on this one. I think there was an upgrade on it, and it was up a little bit today on a down day, but volume really not coming back in here. I want to be watching Wynn Resorts for a pullback into $133.58, which was the December 17th low. Doesn't look like much of a bounce out here, and I'd say you probably got an 80% chance that the next move takes you back down to that December 17th low. And I'd have some alarms on that. Let's take a look at some other stocks in my scans real quick. Yesterday, have a lot of these, so we'll see if we can't go through some of these and see if there's anything interesting in these. I'm going to go through a couple of them real quick. Find if there's anything out here that really jumps out at me. This is kind of interesting. Lawn, higher volume low. What do we have here? Been talking about gold stocks, and I'm going to look at Allied Nevada Gold. 85 cents was the low on November 6th. 8 million shares for that low, got into it. Had a huge day, but didn't break it on volume. 23 million shares on the 9th of December. This thing's been kind of going sideways and a little bit up. Very light volume today, though. Another doji. You had a doji 2 days ago. But some of these gold stocks just not reacting very well in this market. You'd think this thing would probably be doing a little bit better. I guess 30% up off its lows is probably not bad. But I don't see a lot of either juice or action in this particular one. And close back below 85 cents would be probably a good indication it's going to test 72 yet again. It looks to me like this thing's probably trying to get some energy to break down. But you're back into this gap right now, which is what it's fighting. That gap down happened on the 9th with 23.6 million shares. And what do you got? 2.9 million yesterday, 1.5 million today. Really looks like that gap is not finding an abundance of strength as it goes back through it. What else do we have? We got plenty of time here. So let's see, American Apparel, nothing in that. ABT, American Gas Partners. See if there's anything. So many of these charts are kind of tough to see what's going on. Alliant Tech Systems, ATK. This is kind of a little interesting one here. Another one where we're right back up to where these huge gap downs are without a lot of volume. This thing gapped down on the 30th of October, 1.5 million shares. And the first time we came into that was on the 2nd with 263,000 shares. Last 2 days, as we've kind of gone after that gap, 372,000 shares and 152,000 shares. That's kind of telling me exactly what I see a great deal in this market over the last few days, and that is when you do get these bounces, they are getting up to these resistance levels and just finding no volume. And doesn't mean we can't go sideways for a while and break the higher ones, but it sure doesn't look like we're going to go route these in the next few days either. So I would, being a gaming man, would say a lot of these look like they're probably in a trading range and would go back and retest the previous lows. Avago Technologies, this one just had news recently, but of course a huge supplier in the Apple eco stream. Yesterday we had 3.3 million shares, which is just slightly more than the December 5th high at 2.9 million shares. You needed 105. You got into it today. You got 1.3. This is where it is. You get volume all the way up. You get right up to those previous highs, and the volume just seems to be extremely weak. 1.3 million shares tells me you got to be very careful about what you're playing out on these because the surprises on those generally happen to the downside. See if we have anything else out here. BAM, Books A Million. I think that's what the name of the stock is. Let me redo this real quick. Oh, Brookfield Assets Management. Maybe Books A Million's long gone. This is another one that caught in my scan. I wanted to see how this thing was going through the December 1st highs of $50.77. Symbol is BAM. Yesterday, 536,000 shares, so about 50%. Today, 294,000 shares. So kind of getting back up there. Got a question out here. Is the DAX poised to attack 10,100? Let's see if I've got that in my... I've got a bad tick in here, so I need to cure that. I'll look at it during the break. What else do we have? BBY. This one's probably the most interesting to me right now, and especially the action today. You know, the Consumer Electronics Show is over. I'm going to say that for the most part, it was a bust. We're going to be going through that with Tom O'Brien at 4:20 on his show. I see him getting ready in the bullpen to get fired up for his show from 3 to 4. And of course, he'll do the market wrap up at 4, and then we'll start talking technology at 4:20. But Best Buy, kind of interesting stock, has made a high on a lower volume, not that much lower, about 1 million shares up there at the $40 mark. Pierced it, came back into the trading range, down on lighter volume today. But being around this industry for so long, you always need new products driving the industry. And the question is what this... Basically, I'm going to say this was the iPhone 6 quarter for Best Buy with the new high definition, ultra high definition televisions being the only thing really driving a lot of business into them. And the prices of those ultra high monitors, which are probably bad bets now, we're probably at least a Christmas or two away from those being decent buys, and of course having some faster chips in them to make the motion artifacting go away. I'm trying to figure out what is going to be in Best Buy that will really drive the market. Will it be things like Nest temperature controllers? Will it be the Internet of Everything? And right now, it's hard for me to see just that much reaction from what I read for most of the reviewers and people that went to the Consumer Electronics Show in Las Vegas. I've invited everybody, by the way, from the Consumer Electronics Show to go over and have a party at Andy's house. So just in case Andy hears some knocks on the door, I just took the liberty of inviting a bunch of people over. But down volume is not big. Again, this thing blew up last year when they finally came out with earnings, and or actually a pre-announcement, I think, on this one. If we go back and look, this huge gap down happened right after Christmas. I think it's a little better this year. I don't think we're going to get that huge gap down, but I do have a feeling that we're probably going to see and have seen the highs in this thing. But it's probably going to take a little bit longer for the Apple upgrade cycle to kind of wane off, maybe into the first quarter. After that, it's hard for me to see a second and third quarter that's very good for Best Buy. I just don't see that many people walking out with $3,000 television sets for the most part, because you can't buy programming to go along with it. So we'll take a look. What else do we have going on out here? Let's take a look at a few other stocks. Brunswick Corporation now. Bright Cove. This is another one. And again, there's so many of these out here. You want to be keeping an eye on these things and whether or not they can at least come back up and push into these huge gap downs. But you had the huge gap down on Bright Cove. BCOV is the symbol. That happened on, June 25th. The thing rocketed down with 7.2 million shares. Been trying to get back in there. It's pretty much filled its gap about halfway. On December 22nd, got into it with 2.1 million shares. Been kind of going sideways for a little bit, but you've got a nice gap back down here at about $5.50. I wouldn't be shorting it, but my guess is that this thing probably going to fail in this gap and go back and retest that $5.50 level. See anything else out here? Another one coming back up, and this one I may be playing. I want just another buck or two in this thing, and I like it. It is Big Lots. There is one fairly close to my house, and I go into it. Always a mess, poorly run. The customer base is not the best, I don't know what else you can say. I'm probably going to go on a few more of these before I pull the trigger around here and at least get some anecdotal evidence in these things. But look kind of tacky, starting to make me feel that whole swarmy Kmart kind of jazz. What can you say? But down on heavy volume. On the 5th of December, came down with 9.3 million shares. And what can you say? You get 2.3 million shares yesterday. You get 1.1 million shares today. I may be resentful that I didn't pull the trigger earlier on this thing, but somehow I have a feeling this thing's going to tag $45 at least. And if we get one more or two more days of light volume back up into this gap is where I'd like to see it. But I go into it just because it's kind of close. But for the most part, like I said, just poorly run longs. The lines tend to be rather long, and cash register attendance not very fast. And a lot of merchandise kind of trashed, not put away. Few other things. I know it's a low end store, but even the dollar store seems to be much better next to it. We'll be back in a minute.
How would you feel if you had a powerful decision-making tool that has the ability to find high-probability trading opportunities across multiple time frames in equities, currencies, and futures? Search no more. Take advantage of the best trade with the TAS Profile Scanner. Trade with confidence and clarity while using the software that thousands of institutional traders rely on to help them make the best and most accurate decisions. Scan over 1,000 equities, currencies, and futures instruments for high-probability trading setups utilizing the TAS architecture. As Seen on Bluebird terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time, for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. Subscribers will also gain access to the December 9th workshop with John Logan. There's no obligation to pay anything. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And got a question in the den, and it's about my thoughts on the DAX. And I'm going to tell you I haven't looked at it hard enough to give any call on it, so maybe on Monday. So we'll take a look at that. I wanted to look at a few stocks out here that look fairly interesting. Triple top in Barnes and Noble. I keep on being shocked that they're still around, but I guess they are. Nice little high out here on December 9th, 1.8 million shares at $24.62. Tried to get into it with 550,000 shares on November 24th. Didn't test the high. Got 40 cents underneath it. We've now broken it. Yesterday we had 891,000 shares. Today doing kind of a nasty little candle out here so far, 433,000 shares. So you might want to be looking at that one. I like stocks over 30 to short, but this does look like one of the better ones. And I can't think of a company in probably a worse business to be in right now up against Amazon than Barnes & Noble. But keep an eye on that one if this thing dips back down. Looks like a fairly decent trading range back down to this gap at 19, which is a nice move on that stock. Geo Group, another one out here pushing highs on a lighter volume. November 10th got to $41.04, 900,000 shares. The best it's gotten up here was January 6th, where it pierced above it. 520,000 shares, kind of going a little sideways out here, but energy a little off the top. We talked about Golar LNG, and I wanted to see this thing start to pull back in here and solidly close above this last major low on volume, which was the December 16th low. And of course, they're mostly in the transportation of liquid petroleum gas. So I don't know if the price so much as the demand is what's driving their price right now. But again, I've kind of been watching this one very closely out here to see whether we've got a low in natural gas. I suspect this would be a much better play than playing natural gas, since natural gas continues to be kind of languish at the low end of the trading spectrum. But, you know, you had 6.3 million shares on December 16th out here. This thing did pop back in yesterday. I think we talked about it either the day before or yesterday. But it did pop back into the trading range, half the volume, no follow through today, which again makes me think this thing could go sideways for a while. But I'd be interested in this one and keeping an eye on it if natural gas does tend to start moving around. Another one of these stocks that kind of looks like Bed Bath & Beyond, where it kind of gapped down and it's got some gaps that are open, would like just a little bit more is GNC. This thing's got two gaps. The last major one was on the May 7th, where this thing gapped down with monstrous volume. Came back, it's filled that. It really has never had any volume. And if you look down at the bottom of the chart out here, I'm going to break this out just a little bit and zoom in just a little bit more. But I mean, you know, you don't have volume. This thing's coming back up. But I think to pull the trigger, if this thing could get at $50, I think it would be, and light volume continues, I think this would be a very interesting chart with a trading range from where around this high volume move at $30.52 on July 29th to $50. That'd be a $20 trading range on a $50 stock. 40% move. That would be very interesting to me. So we'll keep an eye on it. Another one that's popped up, we talked about this yesterday, that had decent earnings. I want to see how this thing moves. You know, you had monster volume yesterday, 1.9 million shares. Still can't break through this November 28th high, though. Volume pulling off a little bit out here today. Maybe this thing comes back and fills some of this gap, but another one to keep a close eye on. In the meantime, so when you can, not when you have to, we'll see you tomorrow, actually Monday, same bat channel, same bat time. See you for the Tom O'Brien Show at 4:20.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. You're watching Tiger TV.